basically, let me check. Okay, cool. Right, so I'm gonna explain now why I label this as a liquidity grab in the upcoming Euro USD trend. And what is a liquidity grab and why it matters for this trade upcoming here. Essentially, we have a lot of small candles. An area where it touched the belt, another area where it touched the belt had high candles when it relatively goes near the belt, okay? But if we look up in the run-up to it, the market along here had almost no liquidity, like bears had complete control, where their candles are the only noticeable ones along the way, while we have very, very minute bullish candles along the way. We can see that this line is majority red. Yeah? And the size of the candles in relation to when the market moves towards the belt is pretty small. This is how we can know that there's not a lot of people in the market for this currency at this time. So, what is a liquidity grab? It's essentially when the big players in the market come in to increase the volatility of the pair in order to make a break for some sort of level, which it's pretty much always the reason for a liquidity grab, whether it be bullish or bearish. So you see this upward trend here going to the top of the liquidity grab on a 4-hour time frame, where it then reaches the belt. And the belt, it showed some resistance. Right. So what essentially happens is it establishes, when it reaches its low, that the bulls or whatever firm decides that it's bullish on the euro right now, it will start to pump money in to the currency. And so you start to see these large engulfing bullish candles with very small or choppy pullbacks, because retail traders can't really beat, you can't beat the industrial traders, the big banks. You can't, on volume, it's impossible, right? It's like, unless we all collaborated to beat them, it would be impossible. So you can see like a false breakout here, where the market went in a small accumulation phase with low liquidity before, boom, the liquidity comes back in, likely to stop a lot of people out who are in shorts here in this accumulation phase, expecting it to go down, right? Because obviously in this area it hit an overbought level. So it's a smart way for the non-retail traders, when it hits these common indicators, to pump a lot of you guys out, is to push it in their direction to try and counter out those who are going off indicators, right? It's fairly common. So as you can see, pumping more and more liquidity into the market, it's flowing more and more into the direction. Alright, and now we reach the belt. And this is where they're going to reach the most amount of resistance from the retail and other firms and things like that, because Euro USD is known as the belt. It pretty much stays around this level, 1.12, like throughout history. Let's say, if I go back, it's there again. It always touches it at some point. It's fairly belt-like between the up and down modes. Anyway, so let's go back into the zoomed mode on the 4-hour to see where the liquidity grab reached the belt. Why did it show this much resistance at this level then? Because, like I said, we showed it prior here, we showed it here, we showed it here in the same levels, the same regions, in terms of ratio and percentage in the market movement. And sorry to cut that. So we have liquidity grabbed upwards. We have tried to resist it, but they're pumping more and more in, and that's where we start to gap. I always expect a gap to fill, like here. I always expect the gap to fill. So now that the market has gapped, I can see that soon we're going to see some high levels of rejection, because a liquidity grab can only go so much, you know. It can't just go to the moon and take the currency to infinite levels. It would never happen. So we have here on the 4 hours, it's 4, 8, 12, 16, 20, 24 hours of high rejection at this point. It came up and touched it 5 times during the daily candle and rejected every single time. That would be a good point to sell here. Okay, so it started to go in the sell direction of the trend. We can see large bearish engulfing candles coming down. You're gonna see a loss of liquidity soon in the market, as soon as this run is over and people have taken their profits. So you can see it's still highly large, because most of this was bank liquidity, okay? And once they've come out, the retail traders can make the extremely large candles coming down, because there's not going to be a lot of resistance, because they didn't manage to break their level that they chose. Okay, you can see it's a very clear level. 1.15 was clearly trying to be broken. So market fell. It broke below our daily level support, which, you know, it's almost always gonna come back up and retest it. It retested it, broke it twice, come back down. It broke it the first time, broke it a second. We can't really call that a third break, it's a bearish candle, but it broke it now a third time. Okay, well, it rejected it and then broke it twice here. So now we've broken above it. I almost always would never get in here. I would not get in here, I would not get in here, or anywhere around this area. I call these dead zones. When it hits the bottom of the mountain, you don't want to be in that pit. You don't want to be in the pit. Let it create some sort of pattern before you decide to trade, okay? So in this area you can see it's quite conjuncted. They don't know which direction. It's fighting to go either way. They want to keep the downtrend, but clearly the belt just won't collapse like that. It will eventually come back up to touch near where we see is the belt. Okay, so more bullish power came in, and you can see the retrace to test this new level of structure that we see has been pinned before. It was tested here. It's not really being tested in any other way, but it's a clear level of structure identified from here in the future market movement that we couldn't see at this point. So if we put it here, so the market broke out above this, and I could only say that this is a false breakout post. So when the candles came out like this and it fell back into the structure, it retested it, broke it, retested it again, fell through, had nowhere near the bull power to come and retest it again. So at this point I did not know that that was a level of structure. This is a whole level of uncertainty I would not have entered, you know. So now this becomes interesting. This is the point where I see like potential entries, where we have a 1, 2, 3, 4, 5, 6, 5 times 4. It's a 20-hour rejection of this bottom of the structure, the daily support, which establishes it fully as a support to me, and that it will keep our trades generally about this level, and our losses won't go too far below, as we've seen here, because 20 hours of that being support, it's gonna get tiring for the bears to stay at this level, and a lot of them are gonna start getting out, because when the market is in such a small range for 20 hours, is boring, right? You don't want to be trading that, so it's fairly simple to say you're gonna come out. Small candles, not a lot of volume. Okay, a new day rolls around in this trading period here, and we see a lot of bullish momentum. These are engulfing this completely to test that clear level of structure. Over the next 2 days we saw a push to the level of the structure. We saw a 4 candle rejection. That's a 16-hour rejection of the break of the structure. It's pretty smart to go ahead and place a short here, at least to the midway of the structure, at least to the strength. And you could have taken some profits here, let a very small position rise throughout the week while you trade other pairs, it would have come down to here. I would have personally gotten out there. So it obviously then broke the daily support. But as you can see, there wasn't a lot of bearish power here. This was the majority of the bullish volume, and it clearly, like, it had no power to fully break, and it didn't really dip below enough of a percentage. Like, what is that? 30 pips or less? 20 pips, 20 pips. Yeah, it's the average stop loss even. So again, I can see that 1, 2, 3, 4, 5, 6, 7, 8 times 4 hours. Okay? So at that point, we have a 32-hour rejection of a downtrend through the level of support. So at this point, I would be looking to buy. Okay? So we broke through, and I never like to trade when it's below or above my levels of structure. Never. I think it's very stupid. Okay, so we came back into the structure, and the bears tried again to go for a break. And why is this important in a liquidity grab? Because we formed a new level of structure with fairly larger candles than we were messing with before, as you can see here. Okay, so there's a lot more volume in the market now, and we can identify much more clearer trends. Okay? Right, so here I would have gone on a buy, and I would have placed my stop loss just below these candles, like there. And my take profit here, in 09-ish. Likely there, yeah. I mean, my first take profit. Because I always like to take profit at the strength, because from strength, change in direction can happen at any moment. As you can see, like, yeah, I would have closed out here, maybe, even like when it peaked up. Not even, I wouldn't have closed it there. So again, there would have been the peak close for that trade. It would have been a decent trade. Was it? It's nice 50 pips. Okay, but if I roll it to the top, you're talking a decent chunk of pips, you know? Right. So again, like I said, we're still in this channel. We're making a break for the bottom. It's an 8-hour rejection to even touch it. It's not a good time to take the trade. Let it go and touch it. It will go and touch it and test it. I promise you it will test it. It comes. Like, look, if you bought here, yeah, you could have come. But it's 10 pips. It's not worth it. You know, it didn't even touch it. You have no confirmation from the price action to even be trading at that moment. So now we can see the market does go ahead and test it. And it tests on the 4 hour. Doesn't really break through significantly. This candle obviously opened bearish. Tried to test below. Instantly got rejected. And look, it wouldn't have even hit the prior stop. Like, this is a pretty safe level now to consider stop losses at 1.075 on your USD when it touches the level of support. Okay, so when it broke up here, I would have potentially placed a riskier trade. But again, I wouldn't buy this. It's just not enough confirmation for me. 8 hours is not enough confirmation for me. For some traders it is. It could be less time, but still. I like to see two candles here, close to the level of support, to confirm that we're above and we're not going back down. Okay, so as you can see, like, as I tell you that, it ranges, right? Here. It's not much profit to be had, really, unless you have a huge account. Right, so, again, we touched it for 12 hours. It's an amazing entry point here. An amazing entry point. Because we touched it for 12 hours and only once we even broke it. Here we confirm how strong of a support it is. And again, this obviously opened up bearish. It's an engulfing wick. You know, wicks are a big sign to price action traders. So there would have been a lot of shorts to test it down. but it didn't even come through, you know, it broke above. We went and we tested the top within a day. That would have been a nice trading day right there. A nice couple trading days. Look at that. Yeah, over 3-4 days. Alright, so now we're in a bit of a sticky situation because the market hit the top and rejected it. Literally 1, 2, 3, 4, 5. A literal like 24-hour period. Well, 20-hour period, yeah. A literal 20-hour period of rejection. Would have been a sell if you follow my, you know, my analysis. I always get out some profits at strength. So you would have taken some profits here, which would have been smart because the market rebounded. It went to test. It rejected for 12 hours. It rejected the level of structure. So I would have placed a sell here as well, which would have been stopped out. But as you can see, that's 4 trades right now in a row. We would have been profitable until this point where the market completely breaks a level of structure, and it's done so recently. So it's likely we're going to see it to touch it, the structure, because it's been such a strong level. Look, we have almost, you know, we have almost 50 or plus hours of candles on that line, and at least using that line as some sort of basis. And this line also, we have at least 50 hours of using it as a basis, which is nice. So I firmly believe that Euro USD will come down at some point. US dollar is weak, but it will come to test this level of support. So if we zoom out and look at the whole chart analysis, okay, you can see that right now, after I've explained it to you, it should all seem fairly clear, okay? That this was an area of small candles, low volatility, you know, it dipped below the belt, signaling that, you know, a slingshot could be happening. When you pull a slingshot back, it has to go forward. Especially when it's low volatility. When it's low volatility and heading in a way like this, banks see it as a perfect opportunity to stop people out, make some big moves, try to push for a big level, you know? So we can see there's almost no volatility, low volume of trade. This section there comes in with the banks breaking this out with not an area to trade, right? Unless you're going for the risky boy, you go for the sell up there. Right. So where would we have taken our trades? We would have gone, let me get to green to show the profit ones. We would have bought there, that would have been profitable. We would have bought here, that's a profitable trade. We would have bought there, that's another profitable trade. We would have bought here, that's another profitable trade. That's 1, 2, 3, 4 in a row profitable trades. We would have sold here after it showed so much support. Resistance, sorry. Would have sold here, taken profit. 1, 2, 3, 4, 5. 5 in a row profit you would have taken from this analysis alone. This one chart. Trading what you see, okay? 5 profitable trades. And even if you got in on this and you got stopped out, your profit on this is so exponentially larger. You would have finished that week from the 7th of April, well, that month actually. That's a big profitable month. Yeah, you'd be on big profits right now. Your account would be huge. And it's simple, you know. It's trading the simplicities of the chart because everyone is trying to complicate it. This is where I'm going for my profit next. Yeah. So nice and simple. Nice and simple, guys.